Imagine this. You wake up tomorrow morning. You grab your coffee, you sit down at your desk, you open your trading account, and your heart drops. The number on the screen is 0. It's not because the market was unfair, it's not because you weren't smart enough. It's because without realizing it, you treated trading like a casino. This happens every single day. In fact, 90% of traders lose money. Not because they're stupid, not because they lack potential, but because they approach the market the wrong way. They believe more trades mean more profits. They chase every setup they see. They risk too much, too soon, without a clear plan. And they confuse luck with skill, until the luck runs out. The truth is, most traders don't fail because they can't read a chart. They fail because they can't manage themselves. Emotions take over, discipline disappears, and one bad day wipes out weeks, months, or even years of progress. But here's the good news. There is a way to stop the cycle. There is a way to protect your account, grow it slowly, and trade with the confidence of a professional. In the next few minutes, I'm going to show you exactly how to make that shift. I'll give you the same blueprint that takes you from an emotional gambler to a disciplined, consistently profitable trader. And no, it's not about trading more. It's about trading smarter, with a plan you can trust, a system you can repeat, and a mindset that keeps you in the game for the long run. So if you're ready to trade without blowing up your account, let's get started.
Why most traders fail. Most traders don't fail because they can't find the right strategy. They fail because they never learn the right approach. Think about it. You can give two traders the exact same system, same entry points, same stop loss, same target. One will grow their account, the other will blow it up in weeks. The difference isn't the setup, it's the trader. Failure often starts before the first trade is even placed. Many traders sit down without a plan. No defined risk, no daily loss limit, no rules for when to stop. And when the market moves against them, they react emotionally. They double their position to win it back. They chase trades that don't fit their setup. They hold losers, hoping the price will turn. They let one bad trade snowball into disaster. This is the gambler's mindset, and in the market, it is deadly. Another reason traders fail is inconsistency. One day they're scalping, the next day they're swing trading. They jump from one strategy to another, never mastering anything. Each change resets their learning curve, and they stay stuck in the cycle of almost getting it, then losing it all again. And perhaps the most dangerous trap is overconfidence. A string of wins makes them believe they can't lose, so they increase position size, take bigger risks, and ignore the rules that got them those wins in the first place. Trading is not about winning every trade. It's about surviving every trade. It's about protecting your capital so you can keep playing the game tomorrow. In the next section, we'll break down the hidden cost of trading without a plan and why it's the fastest way to join the 90% who fail.
The cost of no planning. Trading without a plan is like getting into a car and driving with no map, no destination, and no brakes. You might enjoy the ride at first, but eventually you're going to crash. Here's the reality. Without a written plan, you're making decisions in real time, under pressure, with money on the line. And when emotions take over, logic disappears. Think about the trader who starts the day strong. They win 3 trades in a row. Confidence is high. They feel unstoppable. But then, one losing trade hits. They don't accept it. They double their size to make it back. Another loss. Now frustration kicks in. They take a trade that doesn't fit their setup. Another loss. By the end of the day, the account is deep in the red. It didn't happen because their strategy was bad. It happened because they had no rules to protect them from themselves. A trading plan is your safety net.
It tells you exactly when to enter, when to exit, and when to stop trading for the day. Without it, every decision becomes a guess. And in the market, guessing is gambling. The cost of no planning isn't just financial, it's mental. The stress of watching gains disappear, the frustration of repeating the same mistakes, the loss of confidence every time you blow up a good week. Successful traders know this. Your plan is what makes you consistent. It keeps your emotions in check. It turns random trades into a repeatable process. In the next part, we're going to uncover the trading psychology nobody teaches and why your brain might be sabotaging your profits without you even realizing it.
Psychology nobody teaches. When most people think about trading, they imagine charts, indicators, and strategies. But the truth is, the biggest battle you will ever fight in the market is with your own mind. Your brain is hardwired for survival, not for trading. And survival instincts, while great for escaping danger, are terrible for making rational decisions in a volatile market. Let me explain. One of the most powerful instincts we have is called loss aversion. It means the pain of losing $1 feels about twice as strong as the joy of gaining one. In trading, this instinct makes you hold on to losing trades, hoping they'll turn around, because taking a loss feels unbearable. But that hope is often what drains accounts. Then there's FOMO, the fear of missing out. You see a candle shoot up. You feel that rush. Your heart races. You jump in late, thinking you're about to catch the move, only to get dumped on as the price reverses. That's not strategy. That's biology taking control. Another hidden enemy is overconfidence. After a streak of wins, your brain convinces you that you've figured it out. You take bigger positions. You skip your rules. And the market punishes you instantly. Here's the truth no one tells you. Trading success is less about finding the perfect strategy and more about managing the person executing that strategy, you. Professionals have learned to override these instincts. They follow rules even when it feels uncomfortable. They take losses quickly, without emotion. They don't chase. They don't gamble. In the next section, we're going to shift your mindset from thinking like a gambler to operating like a business owner. And once you make this mental switch, everything about your trading will change.
Professional mindset shift. The difference between a gambler and a professional trader isn't intelligence, it's mindset. Gamblers approach the market like it's entertainment. They chase excitement. They take trades to feel alive. Their goal is to win big today. And if they lose, they tell themselves they'll make it back tomorrow. Professionals? They think like business owners. Every trade is an investment decision, not a thrill ride. They know they don't need to win every day. They just need to protect their capital, manage their risk, and let consistent execution build profits over time. Imagine two restaurants. One orders ingredients randomly each morning, changes the menu every hour, and cooks whatever the chef feels like. The other has a set menu, a predictable process, and knows exactly what the customers want. Which one will survive? Trading is no different. Without consistency, you're just guessing. A professional trader starts each day with a clear plan, exact entry criteria, defined risk, and a target. They understand their strategy is like a business model. It's tested, it's repeatable, and they follow it no matter what their emotions tell them. They track expenses. In trading, that means losses. They understand that a losing trade isn't failure, it's just the cost of doing business. And just like a smart business owner, they keep those costs small so profits can grow. When you shift to a professional mindset, The market stops being a casino and starts being your business partner. You stop asking, "How much can I make today?" and start asking, "How can I protect my business today?" In the next section, we'll break down the exact pre-market preparation routine that gives professionals their edge before the first trade is even placed.
Pre-market edge. Winning in the market doesn't start when the opening bell rings. It starts hours before. Professional traders know the real work happens in the quiet moments before the chaos begins. That's when they prepare, when they plan, and when they get their mind ready for battle. Your pre-market routine is your first line of defense against emotional, impulsive decisions. Without it, you're stepping into the ring without gloves, and the market will hit you hard. Here's what a strong pre-market routine looks like. First, check the news. You need to know what's moving the market today. Earnings reports, economic data, breaking headlines, all of these can change the game in seconds. Professionals don't get caught off guard. Next, mark your levels. Look at the key support and resistance zones from the daily and intraday charts. These are your battlegrounds, where price is most likely to react. Then, plan your trades. This means deciding in advance your exact entry point, your stop loss, and your profit target. Write them down, commit to them. No guessing once the market opens. After that, visualize your execution. Professionals rehearse in their minds exactly how they'll respond in different scenarios. If price hits their stop, they take it without hesitation. If price reaches target, they lock in profits. Finally, set your daily risk limit. This is your circuit breaker. If you hit that limit, you're done for the day, no exceptions. When you walk into the market with this kind of preparation, you remove uncertainty. You trade with purpose, and you give yourself the same edge professionals use to stay in the game year after year. In the next section, we'll talk about why mastering one single strategy is far more powerful than chasing every new setup you see.
One strategy focus. One of the biggest traps traders fall into is what I call strategy hopping. They try one approach for a week, it doesn't work right away, so they jump to another, then another, and before they know it, they've tested 10 different strategies but mastered none of them. Here's the truth. Every successful trader I've ever met has one thing in common. They have mastered a single setup so well they can trade it almost with their eyes closed. Think about professional athletes. A basketball player doesn't try to master every possible move in the game. They find their strengths and they drill them over and over until it becomes second nature. Trading works the same way. When you focus on one strategy, you build muscle memory in your execution. You stop second-guessing yourself. You recognize your setup instantly. And because you've seen it play out hundreds of times, you know exactly how it behaves in different market conditions. The power of this focus is consistency. You can measure your results accurately. You can tweak and improve your approach. And you can trade without the noise of wondering, is this the right method? Professionals aren't chasing the perfect strategy. They're perfecting their execution of a proven one. And here's the bonus. Focusing on one setup keeps you disciplined. You're not taking random trades just because the market is moving. You're waiting for your play, your edge. In the next section, we're going to talk about something most traders fear, but the pros have mastered. And that's learning how to lose without letting it destroy your account or your confidence.
Mastering losses. Most traders treat losses like personal failures. They take them to heart. They replay them over and over in their minds, and they let them shape the rest of their trading day. But here's the reality. Losses are not the enemy. They're part of the game. In fact, they're the price of admission to participate in the market. The difference between a struggling trader and a professional is simple. Struggling traders avoid losses at all costs. Professionals accept them, manage them, and move on. Think about it like running a business. Every business has expenses, rent, utilities, payroll.
In trading, your expenses are your losing trades. If you keep them small and predictable, they don't threaten your long-term success. The danger comes when you let a single loss grow out of control. That's when one bad trade erases days, weeks, or even months of hard work. Professionals approach each trade with a clear plan: how much they're willing to risk, where they'll exit if they're wrong, and how they'll respond after the loss. They don't revenge trade. They don't double their position to win it back. They simply take the loss, log it in their journal, and prepare for the next opportunity. This approach turns losses from emotional disasters into manageable business expenses. And when you master this, something powerful happens. You stop fearing losses altogether. Because once you remove that fear, you trade with clarity. You focus on execution instead of outcome. And ironically, that's when your win rate and your profits start to improve. In the next section, we'll break down the exact risk management systems that keep professionals in the game for years, while most traders burn out in months.
Risk management systems. If you want to survive in trading long enough to actually become profitable, risk management is not optional. It's the foundation of everything you do. Here's the truth. The market will always be unpredictable. You can't control the outcome of any single trade, but you can control exactly how much you're willing to lose when you're wrong. And that control is what keeps you in the game. The number one rule professionals follow is simple. Risk a small fixed percentage of your account on each trade. For most, that's 1% or less. That way, even if you take several losses in a row, your account is still intact and your confidence isn't shattered. Next, define your stop loss before you enter the trade. Not after, not halfway through, before. This is your safety net, and you never move it farther away to give the trade more room. That's how small losses turn into disasters. Also, set a daily loss limit. This is your circuit breaker. If you hit that limit, you're done for the day. No one more trade to make it back. No chasing. You shut it down and live to trade another day. Professionals also size their positions based on the distance from entry to stop loss. The wider the stop, the smaller the position. The tighter the stop, the larger the position, but always within their risk limit. This system protects your capital and your mental state, because the real goal in trading isn't to win every trade. It's to stay in the game long enough for your edge to play out over time. In the next section, we'll go over the professional tools setup, what you actually need on your screen, and what's just a distraction.
Professional tools setup. A professional trader's edge isn't about having the fanciest gadgets or the most complicated indicators. It's about having the right tools and knowing exactly how to use them. First, your charting platform is your command center. You don't need 20 different indicators cluttering the screen. Keep it clean. Price action, key levels, and maybe one or two indicators you've tested and trust. The goal is clarity, not confusion. Second, a reliable news source is critical. The market moves fast, and big events can change the game in seconds. Professionals have real-time news feeds or scanners that alert them instantly to market-moving headlines. Third, your order execution system needs to be fast and reliable. If your platform lags or your internet drops in the middle of a trade, it can cost you more than just money. It can destroy your confidence. Always have a backup plan, like a mobile trading app or a direct line to your broker. Fourth, use a trading journal. This can be software or even a simple spreadsheet, but it's non-negotiable. Log every trade, the reason you took it, your emotions at the time, and the result. Over time, this data becomes your personal blueprint for improvement. Finally, Keep your workspace distraction-free. No endless social media scrolling, no random YouTube binges mid-session. Professionals treat their trading environment like a cockpit. Everything has a purpose. Remember, tools don't make you profitable on their own, but the right tools, combined with discipline and a clear process, can help you execute with precision. In the next section, we'll talk about journaling for profits and how to turn your trading history into your most powerful weapon for improvement. Journaling for profits. Most traders think the key to improvement is finding a better strategy. But here's the truth. Your biggest edge might already be sitting in your past trades. You just have to study them. That's where a trading journal comes in. And no, this isn't busy work. This is one of the most powerful tools a professional trader uses to grow. Here's how it works. After every single trade, win or loss, you record the details. What was your setup? What was your entry price? Where was your stop loss and target? How much did you risk? Most importantly, what were you feeling when you entered the trade? Over time, patterns start to emerge. You might notice you perform best in certain market conditions, or that your biggest losses happen when you trade outside your main strategy. You may even spot emotional triggers like revenge trading after a loss that you didn't realize were costing you money. The journal turns vague memories into hard data, and data doesn't lie. It shows you what's working, what's hurting you, and exactly where to focus your improvement. Professionals review their journals regularly. They don't just look at their profit and loss, they study their execution, their discipline, and their decision-making. This is how they refine their process over time. Think of it like game film for an athlete. You can't improve what you don't review. When you commit to journaling, you stop repeating the same mistakes, and that's when consistency and profits start to compound. In the next section, we'll cover simulation training and why practicing in a safe environment can accelerate your progress faster than risking real money right away. Simulation training. Most new traders want to skip straight to the real thing. They think trading with simulated money is a waste of time. But here's the reality. Simulation training is one of the fastest, safest ways to develop real skills without destroying your account in the process. Think of it like flight school. No pilot takes off in a real jet on day one. They spend hours in a simulator practicing takeoffs, landings, and emergency scenarios until their reactions become automatic. Trading works the exact same way. When you trade in a simulator, you're building muscle memory for your setups. You're practicing your entries, your exits, and your risk management without the financial pressure of real money on the line. This lets you focus purely on execution. And here's the key. Treat your simulation trading exactly like the real thing. Use the same position sizes you would with real capital. Follow your trading plan to the letter. Log every trade in your journal. The habits you build in simulation will carry over when you go live. Simulation training also gives you the space to test new ideas without fear. You can experiment, refine, and improve without paying tuition to the market in the form of big losses. The best traders don't see simulation as a beginner's tool. They see it as a laboratory for constant improvement. Even seasoned professionals use it to prepare for new strategies or major market changes. When you master your process in simulation, you step into live trading with confidence. You're not guessing. You're executing something you've proven works. In the next section, we'll talk about why the path to wealth in trading is often boring and why that's actually your greatest advantage. The boring path to wealth. Most traders secretly crave excitement. They want big moves, fast profits, and trades that get their heart racing. But here's the hard truth. If your trading feels exciting all the time, you're probably doing it wrong. The path to consistent, lasting profits in trading is not flashy. It's not dramatic. It's boring. And that's exactly why it works. Professional traders aren't hunting for action. They're following a routine. Same strategy, same rules, Same execution, day after day. They know that chasing excitement is a trap. It leads to overtrading, breaking rules, and taking unnecessary risks. The boring approach, on the other hand, builds consistency. And consistency is what compounds your account over time. Think about it like a professional athlete's training. They run the same drills over and over. They repeat the fundamentals until they become automatic. The game might have high-stakes moments, but the preparation, the real work, is repetitive. Trading is no different. When you focus on boring, you remove the noise. You're not reacting to every market wiggle. You're waiting for your setup. You're executing with discipline, and you're letting time, patience, and your edge do the heavy lifting. Here's the irony. The boring trader often becomes the wealthy trader. While others burn out chasing excitement, the disciplined ones quietly build fortunes in the background. If you can embrace the boredom, you can embrace the process. And if you embrace the process, the results will take care of themselves. In the next section, we'll discuss red day recovery, how professionals bounce back from losing days without letting emotions sabotage their next trades.
Red day recovery. Every trader has red days, even the best. The difference is how professionals handle them compared to amateurs. Amateurs see a red day as a personal failure. They get angry. They feel the need to make it back immediately. That's when revenge trading takes over, and one manageable loss snowballs into a disaster. Professionals? They see a red day as data. Nothing more, nothing less. Here's the process they follow. First, they stop trading. No exceptions. If they've hit their daily loss limit, they shut the platform down. They walk away from the screen. This isn't weakness, it's discipline. It's protecting their capital and their mindset. Second, they review. They look at their journal, their entries, their exits, and their reasoning. Was it a bad market day for their setup, or did they break their rules? This reflection turns a bad day into a learning opportunity. Third, they reset. They do something away from trading. Exercise, spend time with family, read. They make sure they're emotionally recharged before coming back. And here's the key. They return the next day without baggage. They don't carry the loss forward. They don't try to get even with the market. They stick to their plan as if nothing happened. One red day will never destroy a disciplined trader, but one emotional reaction to that day can destroy months of progress. The goal is not to avoid red days. It's to make sure they stay small, manageable, and never shake your long-term confidence. In the next section, we'll talk about identity transformation, shifting from someone who trades to truly becoming a trader in mindset, habits, and lifestyle.
Identity transformation. There's a big difference between someone who trades and a trader. One is an activity, the other is an identity. When you see yourself as someone who trades, you treat it like a side hobby. You show up when it's convenient, you break your own rules when you feel like it, and you judge yourself only by short-term results. But when you become a trader, it changes everything. Trading stops being something you do, it becomes part of who you are. Your actions, your discipline, your routines all align with that identity. A real trader has a set schedule. They prepare every day. They protect their capital the same way a business owner protects their inventory. They journal, they review, they improve. And they do it whether they feel like it or not. This shift doesn't happen overnight. It comes from building habits until they become second nature. It comes from respecting your plan more than your impulses. And it comes from making trading decisions that your future self will thank you for. When you adopt the identity of a trader, discipline stops feeling like a chore. It feels natural because it's simply who you are now.
And here's the best part. Once trading becomes part of your identity, consistency becomes automatic. You no longer ask, should I follow my rules today? You just do, because that's what traders do. In the next section, we'll talk about finding community, why surrounding yourself with disciplined, like-minded traders can accelerate your growth and keep you accountable for the long haul.
Finding community. Trading can be one of the loneliest professions in the world. You're sitting in front of a screen for hours, making high-stakes decisions in silence. And when you're alone, it's easy to get lost in your own head, to second-guess yourself, to break rules, to spiral after a loss. That's why finding the right trading community can change everything. A good trading community isn't just a place to share charts or call out setups. It's a place where accountability lives, where you're surrounded by traders who take the craft seriously, where discipline is the norm, not the exception. When you're in the right group, you learn faster. You see how other disciplined traders prepare, how they manage risk, and how they handle bad days. You get feedback from people who understand exactly what you're going through, and you're reminded that you're not in this battle alone. But here's the key. Not all communities are created equal. Avoid groups filled with hype, unrealistic promises, and get-rich-quick attitudes. Those environments breed bad habits. Instead, look for communities where results are built on process, patience, and professionalism. The right people will keep you grounded when you're overconfident and lift you up when you're feeling discouraged. Surround yourself with traders who are where you want to be, and you'll start thinking, acting, and trading more like them every day. In the final section, we'll bring it all together. Your next decision and how to take everything you've learned today and start protecting and growing your account from this moment forward.
Your next decision. You've just walked through the blueprint to protect your account and trade like a professional. We've talked about mindset. We've talked about preparation. We've talked about risk management, discipline, and building an identity as a trader. But now comes the moment that matters most, your next decision. Because knowledge alone won't save your account. Action will. The market doesn't care what you know. It cares what you do every single day you sit down to trade. You can keep doing what most traders do, jumping between strategies, trading on emotion, and letting the market decide your fate. Or you can commit right now to a new standard. A standard where you have a clear plan before the first trade, where you risk small, follow your rules, and track every move you make, where you treat losses like business expenses and never let one day destroy your confidence. Remember, the traders who survive and thrive aren't the ones who win every trade. They're the ones who protect their capital long enough for their edge to work. So here's your challenge. Starting with your very next trading day, put this blueprint into action. Not next month, not after the perfect setup, now. The market will always test you. Your job is to show up ready every single time. If you're ready to protect your account and start building consistency, hit the like button, subscribe for more trading psychology strategies, and comment below with the one habit you're committing to today. Your future as a trader starts with the decision you make right now.